Just want to watch Manifest.
All they do is eat sucker.
You watch that.
Yo, what's good, everybody? Can everybody hear me all right? You type it in the chat. Oh, wait, maybe I'm muted. No, I don't know. I'm not muted. Can y'all hear me good? Loud and clear. Cool, cool, cool. Man, I appreciate all of you showing up. All these beautiful people up in here, man. Look, I just want to say too, before I start on any of this is, man, I'm so proud of everybody in the Wolf Squad. I know it gets crazy. Money's lost. You know, we share a whole lot of wins together, but I also just want to acknowledge just how great I think everybody is doing. And this, you know, despite the times we lose money, the times we beef back and forth, it's all a process. And I just want to say is sitting in leadership in the Wolf Squad of just how grateful I am for the platform and how grateful I am to have this community of people. Just look, we're, you know, granted, it's not everybody all in stocks, it's everybody kind of doing their own thing, but 37,000 people just trying to be better, man. Like there's something really rich and wonderful to say about that. And so y'all are great, man. And you should be proud of yourself and the effort that you're doing to just show up and do the work. It's not easy work. Discipline is not easy. It's not easy because we all have lives. We all have other things that we have on our plates. But the fact that you still show up, the fact that you still do the work, and you try, it's going to make all the difference for you. All of us, really. Just as much as you guys feel like I'm giving you value and you're learning from me, trust me, I'm learning a hell of a lot from you guys too. And I just want you all to know how committed and how proud I am to have the platform that I do with Wealth Squad and to contribute. That's it. That's all I want to do is I want to show up every day and I want to contribute. And you know, I love reading those messages that you guys send me, man, of all your wins. So I appreciate it. That being said, I know a lot of you have reached out to me about how do I find my plays, and I just want to say this about this this training for tonight. So for tonight, I hope that you've watched my other trainings, the charting and due diligence and the master the charts, master your income. If you haven't, you know, it's fine. You won't be entirely lost on this whole thing, but as a prerequisite, it's just helpful going into some of these things because I want to work quickly and I want to go through some things. So I know we all start our due diligence at different times, right? Some people wait until Sunday to do theirs, right? It's you know, other people start earlier. Saturday, I start on Friday. I do some more on Saturday, I do some more on Sunday. So it gives me the time to be able to really wrap my brain around some things, and I'm not playing catch up so much on you know, come Monday. And some of the things that I try to anticipate with are already answered because I dove into it over the weekend. So I give myself the cushion, I give myself the time, the room for error, if you will, to compensate for some of those things if they come up. Because you got to be able to pivot, man. It's just like in life. You got to be able to pivot real quick. So, and that's how it is on the stock market. We build our watch list. Key puts out his 20, 30 stock watch list. I put out mine. Ray puts out his. Kayla puts out hers. But at any moment, you still got to be able to pivot and keep your eye, as they say in the military, keep your head on a swivel. Keep your head on a swivel, y'all. Always be willing to adapt. I just want to do one. I want to do one thing here. Okay, it's fine. I'm not worried about it. Everybody's good. Can everybody see my screen? I just want to make sure that everybody can see it. Can you just type it in the chat? Cool. We're good. Excellent. We shall proceed. Maybe. I always have technology problems on this damn thing. All right. So becoming a stock market sniper, let me just say, it ain't easy, but it sure is fun. I know that there's probably some new people in here. I don't want to spend a whole lot of time on this, but just a little bit about myself. I joined the Wealth Squad in January of this year just for myself, to be better with my investments, to be more aggressive. I did really well. I just shared knowledge, really. Like at the root of it, I just shared knowledge. I engaged in conversations when people had things that they had questions about, and I just dipped into my own life and my own experiences, and I tried to share real value with people. And then at the same time, I was just studying the market on my own, techniques. I was watching Chris's content. I was devouring courses, and I hit on some big plays, and I shared all of that knowledge with everybody. And you know, after a while, play after play after play, value after value, Chris got wind of it, and Chris called me into leadership. And I'm happy to be here. Background on me is I've spent the last 14 years as a career in the entertainment industry as an actor and a producer, voiceovers more recently, but acting and producing pretty much all 14 years. Commercial, stage, film, TV, all of it. So things are going really well. I just signed with a big bi-coastal agency, so I'm super excited about that, and got some projects in the pipeline. So I'm excited. A lot of good things happening. Before that, in another lifetime, I was a military veteran. I was in the Navy for 5 years as a chef. I was stationed in Hawaii all 5 of those years on a Aegis destroyer, a warship. I know life was tough. it was hands down the best 5 years of my life. It taught me so much about just navigating life, myself as a man and as a person. And it was wonderful. While I was there, I played semi-pro basketball. I played for the All-Navy and All-Navy Hawaii basketball teams, played for my ship's team. I got recruited to Southern Illinois on a full ride scholarship. Ultimately didn't take it. Basketball took me on a weird, crazy journey, but I played in the NCAA summer leagues out there in Hawaii, and now I play recreationally here in NYC in the urban pro leagues. I try to play in the the Hoops in the Sun in the Bronx and some other places. And yeah, basketball is a good recreational sport for me. I'm a father to 2 boys. I was married in another lifetime, have 2 kids from that marriage. Brandon is in the red and black checkered shirt. My son Nathan is in the yellow. Those are my little dudes. They're my why. They're the reason I work so hard. They're the reason I put forth all the effort that I do, is to give them a better life and a life that I didn't have when I was growing up. So those are my dudes. Just a little fun fact, hobbies. I love sports, being active. And right now I'm training for a 12-hour endurance race in the Poconos next month in July. Don't ask me why. I guess I'm just going to go see what I'm made of. But I'm excited about it, nervous about it, scared about it, but I'm going to crush it. I'm excited. Why are you here? Like, really, why are you here? To make money, right? I want you guys, if you haven't already, and if I ever preach to the choir, forgive me, but get very clear and get very specific about your why and your how, right? It matters. It makes a difference. It's the foundation of everything that you will do from here on out. It'll be at the root of everything you do. Just like when I set out to be an actor, I had a very, very specific statement of purpose of what I wanted to do, what I wanted to accomplish, and how I wanted to accomplish it. So be very clear about it. If it's vague, take it a step further and ask another question about it, right? So if your why is rooted in to make money, then let me ask you this: what's sustaining you and keeping you going forward the moment that you lose it? Think about that for a second, right? And I don't mean necessarily that you're going to lose it all, right? I just mean even a little bit, because I notice in the Discord, I troll the Discord all the time. And when we're winning money, it's wonderful. It's great. We're winning together. But when we lose, attitudes shift, emotions shift, people change. And so there's a real question with that I've asked myself in those moments when I get heated at myself. And it's, what is my why? What is my how? What's sustaining me? If I'm rooted in this, I want to make money. And look, that's a very, very real goal, right? Ultimately, yes, we're all here to make money. We're all here to buy the stocks, sell them, make some money, reinvest that, right? That's the blueprint. But what's behind that, right? That's the part that needs to be clear, right? And if it's to make money, great. How much? How much do you want to make? How much do you want to have in your bank accounts? How much do you want to have in your investment portfolios? How much do you want your kids to have at a certain age? Like, the more specific you make your ambitions, the more specific you make your goals, I'm telling you, you're going to accomplish every single one of them. Granted, like, look, I wanted to play in the NBA at one point. I got very specific about it. Did I make it? No. But there were things along the way that I noticed that, might have deterred that and might have switched that up. And so you have to be cognizant of that. The principles that you're taking over from your everyday life are no different than what you're doing in the stock market. So don't treat the lives differently, right? You're not a human being one moment of the day, and then you're a trader all of a sudden. Then you go back to being this family man and all this other. You're the same person, the same way that you're operating in your everyday life with your family, with yourself, is the same principles and the same way that you should be carrying yourself in the stock market, right? Losing in the stock market is inevitable. Guess what? It's going to happen to you. It is. It's going to happen to everybody. And I don't mean that for you're going to lose it all. That's not what I'm saying. But I think there's a real prerequisite to excellence that I think people need to understand. And that's, you have to look at it from both sides of the coin, right? I think about the time when I joined the Navy. I walked right into my recruiter's office. I knew nothing about the military. I knew nothing about it, but I wanted to know from the start. I went to my recruiter and I said, tell me all the bad stuff that's going to happen to me and tell me all the good stuff right off the bat. I wanted to know. I wanted to know what I needed to be prepared for. I wanted to know the mentality I needed to have going into something, right? Because here's the thing, and Chris talks about this all the time. You're not up against rookies. You're not up against amateurs. You're up against some of the smartest people in the entire world, right? So why are you going to go into the stock market with a mediocre mentality? Why are you going to go into the stock market with a mediocre work ethic? You're going to fall on your face, right? And so I'm committed and I'm so adamantly driven to helping bridge that gap for all of you and to helping you understand both sides of those coins. So in those losses, right? Well, backing up a little bit, I wanted to, I look at IKEA, right? For those of that have taken his options course and have listened to him speak, his why is incredible, about his mom, about freeing prisoners, right? Doing all of these wonderful philanthropic things. It's more than money for him. He makes so much of it in the options world. It's crazy. But his why is bigger than any of his bank accounts. And so that's what it has to be for you. And if you don't feel like it is, whether you vision board, whether you journal, whether you, I don't know what you do, right? But if you feel like it's coming back to money for you, step outside of that and expand and go deeper than that, right? Because that's the real motivation. That's what's going to be your momentum through all of the rough moments, right? So when those losses come, the real question is, how will you handle it, right? Attitude shift, personalities change. And the way that you handle it, your answer, which is going to be followed by your actions, is going to dictate every single thing else afterwards, right? It's going to dictate your success afterwards. It's funny. Chris was on live last night. He was talking to the lady who went from 50,000, who took 50,000 to 600,000. And there was somebody in his comments that was saying, everyone was commenting, yo, the Wealth Squad, it's great, it's wonderful, it's all this stuff. And there was a couple of individuals in his comments that were like, don't believe all the hype. There's a lot of money being lost and people need to acknowledge that. It's not all great. It's this and that. So in my mind, I'm thinking that this person has already suffered massive loss, or what's massive to one person isn't massive, or it may be massive to another person, right? Some person might lose $500 and that's their whole entire savings for the week, right? Another person might lose $9,000. Look, I lost $9,000 in a day. That was a lot of money. I am still sick about it. But everyone has a different tolerance. Everyone has a different threshold for loss. And obviously you reach a breaking point at that, right? Because we sell our time for money to be able to get that back. So there's a lot that goes into it. Those emotions are heavy. But understand this, the way that you handle adversity and loss, no matter what it is, whether it's money, whether it's family, whether it's friends, doesn't matter. The way you handle your losses is going to dictate the trajectory that you're going to be on after the fact, right? So think about that as you continue to show up and do the work, right? You look at the 1995 NBA playoffs. Michael Jordan, the Orlando Magic. I told you I'm a sports guy. I learned through analogies. That's it. I'm a Bulls fan. Love The Last Dance. 1995, Michael Jordan comes back from retirement. Guess what? He gets eliminated from the playoffs. Orlando was the first team to eliminate them from the playoffs in their championship quest, right? How did they handle it? Well, if anybody knows anything about MJ, he was back in the gym the very next day. The very next day, they were all back in the gym. All, the season, some of the season went on for other people in the playoffs. Other people, it was already over. They were on vacations, whatever. They were playing in the Olympics, whatever. They were back in the gym doing the work, right? What happened the next season? 1996. They come back, 72-10 record season. They win 3 straight championships after that, right? His why, their why, was bigger than that loss. What they were setting out to do, the accomplishments, they put in the work. They got right back to work and they assessed what it was they needed to do. So in those assessments that you guys are making for yourselves as this prerequisite, right, of where I'm trying to go with all of this, is that, look, what did you do wrong? What did I do wrong, right? Every trade that I lose, every trade that I look, and it's tough as an admin because, we know that you guys follow what we say, not always blindly, but we know that you guys respect us, you trust us, right? And there's a heavy responsibility with that. So please understand how much ownership we take in our roles and how serious we take it and how much better we try to get with every single play that we enter, right? So those same questions that I have here are the same questions that I ask myself. What did I do wrong? Is there something that I overlooked or underestimated? Was there something in the due diligence? Was there something in a partnership that I didn't take into account? Was there something with the moving average that I didn't take into account? What were those components, right? And going back and talking to you about being clear about your why and your how, it's the same thing. Be very clear, be very specific about these questions too. Did I enter or did I exit at the right time? If not, at what point, where could this have been? What could I have shifted, right? Ask yourself the hard questions. The more transparent you are with yourself and what it is you're doing, the better the trader and investor you're going to become. And I've talked about this before as a sports guy, right? Is that the stock charts are your game tapes, right? So when MJ lost, MJ was going right back to the lab, the weight room, the basketball court, the film study. He was studying what needed to be done from this loss, right? In the same way that we have to do the same principles in the market, right? Because the market doesn't care about our feelings. It does not care, right? So we have to always be driven to succeed. And the only way that you succeed in that is sticking to the basic fundamentals, right? And as an actor, the camera is my friend. It's going to reveal every single twitch, every single blink, every single flub in my language, right? But the more that I trust it, the more that I lean into it, the more it's going to give me, right? And so it's the same concept with you and understanding stock charts and the market and due diligence. The more that you guys lean in to these resources, free resources, you all are going to be lethal, man. You all have the potential to do it, right? It's just a matter of what you're putting in terms of effort. Now, you got 2 ways that you can go, right? Stocks or you got options. Stocks, there's less risk involved, right? You don't lose a single dime unless you sell your shares, right? I know it's not all entirely true, right? But let's just bear with me. And then there's options. There's a higher risk, there's a higher reward, right? The caveat to that is that you can lose your entire investment in a matter of seconds, not minutes, seconds. And I think many of us have already experienced that. And look, it's a rite of passage. It's a welcome to the big leagues moment. And it's one of those things that for me, I make mistakes. I make mistakes on stage as an actor. I flub my lines all the time on camera. I celebrate my mistakes. I celebrate them because they're really, really rich learning experiences. If you want them to be, if you're closed off to that, then they won't teach you a single thing. But before going in to either of these, you must know your risk tolerance before you ever invest a single cent. If you understand your risk tolerance before you jump in to this category, right? Stocks or options, the better off you'll be. You'll understand a heck of a lot more. And the biggest one of all is patience, right? Your patience is what's going to pay you. In another lifetime, I used to sell cars. In another lifetime, I used to work in sales. And I think it's the greatest life lessons that you can learn through sales is like, look, you're not paid for what you do. You're paid for what you start. And as I was selling cars, I would go to the auctions, and when I was working like used cars at one point, the money that you make is when you buy it. It's not when you sell it. It's when you buy it, right? That's why we always stress about entry points. So as I was saying, hopefully watching my previous videos, I talk about Chris, I talk about Gerald and the influences that they've had on me, and the whole money flow of the 4 stages of how stocks move 4 stages: sideways up, sideways down, sideways again, right? The 4 stages. When you understand those things, your patience is what's going to help propel you to where you need to go, and reaching those goals, right? So one of the things I wanted to go into now is that I said my due diligence starts on Friday. So I want to work with y'all in real time and go through the things that I'm seeing, the things that I do, and how I'm assessing it all, and see where all of that lands. And look, let's go find some plays. Let's go find some plays for Monday. I want to open this chat up for a second and see where y'all are at. Is everything making sense to you guys? Do you guys have any questions at this point before we go into this next part? No questions? We good? Proceed? Moving on. Let's go. All right, so I'm gonna stop this screen share, and then I'm gonna go to the next one. All right, y'all. So everybody's good? Everybody can still see my screen? We good? Cool. So I know everybody always asks about optimizing the screeners and all of that stuff. Look, I just want to say this. The screeners are great. They are. They filter out a lot of things. So one of the things that you can do without needing those screeners is you can start here with FinViz, right? So I'm just using the sites that I use. There are other ways you can do it through, like bar chart. You can go to some other spots too, but FinViz is where I live, right? So it was a great week in the market, right? Look at where all of this ended. The whole week is green. The whole day really, the whole day is red with the exception of tech. The whole week is red, green, right? So in an earlier training I put out, I live here at this 3-month relative performance, right? That's what I measure in terms of like finding plays in areas where everybody else, in places where other people aren't looking, right? I'll come here and I'll look in the opposite direction. So I want to back up though for a second. Where I want to back up to is to the 1 day relative. Okay, so we see in the relative for the 1 day that it's the utilities, the financial, and the consumer cyclical, right? So what I'm doing, I'm just gonna jot these down. Utilities, financial, and consumer, right? That's just for the day, right? And then the week, you got energy, basic materials, and you got financials. So I'm gonna come over here to my screen, and I'm just gonna throw out the presets that I've already like saved for myself. I gave these away to you guys already. You guys already have these. So this is just where I'm working from. Hold on, I just want to minimize some of these things. Okay, so just in this preset, right, that I've already given you guys, you've got 43 opportunities. And coming over to the charts, right? And in the performance, you can toggle this. The performance, I toggled it first for being today up. And I'm gonna zoom in for a second so y'all can see it closer. So a lot of these things are not going to be plays, right? They're gonna be too late. What, Malik? Why are you raising your hand, man? What do you want? What do you want? I'm lowering your hand, bro. Chill. Hydrate, man. Yeah, y'all. Just so you know, like just to reiterate, the presets I've already given you in the previous 2 trainings. Okay, so I'm not gonna go over it. I might drop some new ones, but the old videos, they are in provider resources and they're in Wealth Squad University. Okay, that's where they're at. They're in there. I'll just work on pinning them in the room too, just so you guys have them at your disposal much quicker. So going over these, right? It's just purely looking at volume, the stocks only, right? And so this is everything. But what I want to look at, I want to look at the week. So like I was saying, the week was up, energy crushed it, right? So I'm going to go straight to energy. And going straight to energy, we went from 43 opportunities to 2. Okay, we went to 2. It's okay. But what I'm looking for in all of these, and granted, here's the thing. I know there's a lot of people who don't mess with penny stocks. They don't mess with penny stocks because there's such a high amount of volume that people are trading it every day, and which affects the support and the resistance, obviously, right? It's hard to really break through and go anywhere because so many people are having transactions with it. But some of the biggest runs this entire week were penny stocks. So don't sleep on them, especially if you can play them in options. So what I'm looking for in these charts, and I go through really quickly, is that slight green uptick, right? As you can see it over here. And then I come to the stock charts and I look at it. But when I'm going through the opportunities first, all I want to do is I want to pinpoint them. I want to see which ones they are. I write them down, and then I come back to them later, right? So even for this one, you can see that this is below, let's say, so 218, right? And I don't usually look at the charts in FinViz. What I do is I usually take it to stock charts, but I'll just do it here for convenience sake. Is that, look, this is at 217. So already just looking at this chart, not knowing anything else, I can already say that this is definitely more than likely going right back to at least 227 to 230. Why? Because look at all of the support. Look at all the resistance, right? All of the previous price points. It's all the way across. You can't just look at this fractal moment over here. You've got to look over here too. Where these moments are is where it's going to sustain the price when it breaks through the resistance. Why? Because when it breaks through the resistance, your resistance ultimately becomes your support, right? So 230. It's got real strong support at 242. 240 also, not 242, 240 also. Will it hold at 250? There's not a whole lot of support up here. There's not, right? But it could still go there because price has memory, like 260, 263, it could still run, right? So now, this isn't the best example, but it's still an opportunity. I don't sleep on any opportunity. Opportunity is opportunity to me. Whether or not that's your philosophy or your theory, that's up to you. But for me, I don't sleep on opportunities. Free money is free money to me. So I just make a note, right? So OSG, and it's obviously in the energy sector, right? So then I'm gonna jot that down. Maybe I'll put a little note about it being where it was. I'll go back to the screen. Okay, so the energy sector, that was one, right? The next one was basic materials. So let's go to basic materials. The other one wasn't really a play. It wasn't really anything. Actually, I want to back up one more. I want to go back to energy because I looked at today up. I also want to look at today down. Which isn't really anything. We look at the week up too, right? Because the week finished green. So I want to look at the week also. So same thing, right? Same two. So we're going to go right back to the week down. And we got nothing. And that's cool. It's fine. So then from there, let's go to basic. We're going to go right to the basic materials. Same thing, week down, nothing. That's okay. Today down, there's two. So even on this one, right? So what am I looking for in the today down? It's in the options world. It's also like looking to see if it's breaking out. Is it a good entry point? Same thing with swing shares. Is it a good entry point, right? And so obviously the optimal time to get it is obviously at 43, is obviously way down here, but the 4 stages, right, is here. And now it's in that stage 1 phase, right, at 56. So it's going sideways. So if you're entering this play, this is probably a good time to enter, because if you look up at the price target, it's gonna give you $7 a share per share, because it'll go back there. It's strong enough because the overall chart is only going in one direction. So again, CBT, just writing it down. That's all. It's just a quick scan, quick glance at it all, just to kind of assess the chart, see where the chart's at. Going back to today up. Actually, the thing is though, is I want to look at some of the higher price stocks though too. So here's some with TRC though. TREC. Do y'all see that? What do y'all see in TREC? Let me just move this chat thing out of the way. What do y'all see? Do y'all see what I see? Of just the bullish trend, right? Good? Makes sense? you know. This goes to 840, possibly to 9. That's it. About to break it out. So as I'm just saying. So what I'll do is I'll just take it from just the Finviz chart, just because I like the stock charts better. And I'm just going to come over here with it. Oh, of course not. I thought I was logged into this man pajama. Guess not. All right, here we go. Back in business. So TREC. Pop this bad boy into the stock charts. And everybody always asks me what indicators I use. I use the 20-day moving average, the EMA 5, and the 200 on mine for anybody that asks. But look at it. You know, it's right there. It's right there about to break out. It's going to run. It's going to do something. So what I'll do is I'll write this down, and I want to know more about it, right? I might star it, come back to it. Just writing in breaking out, right? And I'll come back to it. So write that down, go look at it. Moving on. We'll come back to it. So that's just one spot. Here's what I want to do though. I didn't give you guys this one. This is for volatile day trades, right? I know a lot of people talk about wanting to day trade things, and I've tried to perfect this screener as best I could to come up with some really, really solid plays and just to have a handle on what's volatile, what's moving. So you see there's 53, right? So for this, I'm going to put the exchange at NASDAQ. I'm going to put the beta over 1.5, and your beta is basically like the volatility, essentially. Price point, look, this is all based on your budget. This is all based on whatever you want to do, right? I just set it at over 30 because over 30 is a good price point for volatile day trades. Average volume, again, you want something that's over like 1 million. It starts to move around 300,000. I try to catch it around 200 and then ease my way into it and catch it before it breaks out. But over 1 million, like it's got momentum. There's a lot of hands on it at this point, right? So the biggest idea for me, what I really take pride in is trying to catch it before it hits that million mark, because everybody's on board with it. It's just like the shoes I wear. It's just like the clothes I wear. I like to have shit that nobody has. So I try to catch it early, and catching it early, catching any of the stocks early is always around that 200,000 mark. But people are just impatient. If you don't have patience, 200,000 ain't for you. You might as well just go to 1 million. But I'm just going to say that if 1 million is where you live, you're also going to miss a lot of opportunities because you're impatient. You're going to catch them late. So that's the best piece of advice I can offer you guys in that regard, right? And so when I do the screener too, I put it on optionable because, like I said, in the plays that I put out, I want to make sure that everybody has a chance, right? I don't want to just put out things that people can grab option contracts on, but or that people can grab shares in, but they can't play options in it, because chances are there's some plays where you can scoop up the shares and then you can crack heads on the option contracts and win both ways. And that's the plays I try to find, so it's universal for everybody. And the float I put over 10 million. And the float is basically, we talk about stocks being shorted, right? So it's essentially supply and demand. The general supply of what's given to the insiders, and then what's available for the general public, which basically becomes the demand in a sense, right? And the difference of those two is what drives the share prices. So looking at these, there's 53 opportunities just right off of the bat, right? So you can look at them all at once, or you can go straight to the sectors that were thriving for the week, which was energy, right? You can just pinpoint all the energy ones. This is exactly where I start with things, right? And so obviously there's this one in FANG. And just bring it to the charts. You know, for me, obviously I see it just going in one direction, but in terms of having a play with it, I'm looking for the gaps, right? I'm looking for the gaps in from where the price is, from where it's been, and then also where it's going. This is obviously a growth stock. It's obviously going in one direction. So if you are going to invest in the shares, this might not be a bad opportunity, right? That's just looking at the chart. I don't know anything else about this company, but going back here, FinViz I love because it tells you like, so right here that the price target was upgraded to 114. Well, it's 96. So it's got another $20 to go. So this also is an opportunity, whether that's in options, whether that's in swing trading, that's entirely your call, right? But this is also something that I would look at because of all of this right here. It's all bullish indicators, higher highs and higher lows. That's all bullish indicators. So there's opportunity to be made here in this one. So write it down, y'all. And just come back to it in your research, right? Moving along to the next one. So let's go to basic. Basic materials, the GPRE. I don't really see anything with GPRE. I remember being in this play once. But I'll just say this. In the same way that I look for the uptick on the bullish charts, it's the same thing I look for in the bearish charts. I look for the tick also, right? And granted, this is where it closed at, but this is where it went. It went down to 31. So chances are, because of the way these candles are set up, chances are this is probably going to be bearish on Monday. And you know that where this level is at 31, it has the potential to fall to 30, and then probably right down here to 27. Just looking at the chart, not knowing anything else. That's another one. If you're looking to invest in it, that's another avenue that you can go. Basic materials. What I want to do is that's just one of the ideas, right? So I use the sector to my advantage and fine tune it that way to see what's moving in those directions. But also it's cool to just come and just lay them all out, right? So it's 53 opportunities right off of the bat. And a lot of it is all the super volatile stuff, right? So you got the builder's first source. This is one. This is something I'm going to look at. Do I know necessarily that it's a play right off the bat? No. But when I see the gaps, when I see this like 45 to 50, look, that's $5 per share. I don't know anything about the RSI. Chances are, I'm just looking at this, right? The RSI is down here at 54. So it's still at a pretty low level, which tells me it's got room to run. It's got room to move. So it could very easily, it's probably easy going to go to 48 for sure. And then once it busts through that, right back to 50. So builder is another one. Write it down. It's an opportunity, and however you have to organize those is up to you. But for that's basically $5 per share difference. Here's another one with Blink. And granted, some people probably played these today. People, I see these all the time. I always cross-reference in the Discord to see what people are getting into and what they're doing. I don't always get a chance to check it in real time necessarily. Sometimes I just get into the plays that I do before that. But, Blink is one that I see all the time in the Discord. So I know people are active with it, but this is the same thing. This is another one, right? You see the resistance at 45. It's probably going to hold here. It's probably going to have a hard time breaking through. because of all of this back over on this side. But it's also a big difference of where it was before. It was at 55. So you have basically a $13 per share difference in Blink right now. And granted, the optimal level to like buy this is here, right? But now it's in like, again, the 4 stages of the money flow, right? It's in that stage 2 phase. So do you buy it? Not necessarily, but it's also not that high up on that stage 2 level. So you have a confirmation that it's going up, which is better than going in on the stock and having it plummet instead, right? At least you know that it's going up. So Blink could be another one. How's everybody doing? Everybody still with me? I just want to check in, that's all. Let's see. I just want to read through some of these comments real quick. All right, good stuff. Y'all are good. Good. You would have the average volume at 200K or over 100 million. So yeah, so like if you want something super volatile, right? Your volume is transactions. Your volume is the amount of, basically the amount of times that stock has been traded in a single day. So if it's over, like just for instance, the last stock we looked at, Blink, right? Let's just go look at another one. I'm trying to look at stocks, man. Yo, here we go. I like blue. I like the chart in blue. I don't know if I like the company. I don't know if I like anything else, but I mean, but here's the thing, right? So I actually want to take this one over to, I want to take this one over to stock charts. I want to take this to stock charts because I want to draw on it. Take it back to kindergarten class when we got to have arts and crafts. So what happened? Something happened. What did I do? I pressed something. I went back. I didn't mean to go back. I went to the previous chart. Hold up. See, there's always some technology thing with me. I'll get it one of these days. Okay, so with blue, look, I don't know anything about this company. I don't know what this sell-off was for. Have no idea. Maybe it was earnings and they sucked. Have no idea. But this would be something that I would actually look into, right? It would be something that I'd look into. Why? Because since March, this is just consolidating, right? And I talked about this before, is like, what does it mean when something consolidates? It's basically like it's loading the rocket ship with the rocket fuel, man. Whether in whatever way that is, right? So as I was saying that I look for that green uptick. Well, this is the red downtick, right? This is the bearish chart. So chances are this thing's plummeting for whatever reason. I don't know any of the catalysts behind it, but I know if I'm going to play this play, I'm going to look at these levels, right? And you can see, you can bring this over to, you can take it to trading view if you want, but even in stock charts, you look at it that you've got, chances are it's going to come here to 30, and they're not perfect lines. I know. I don't care. And then here, right? It's not a whole lot of support for this thing. I mean, yes, it touched this, but it could also plummet. So look, and if you're in the options world, or if you're looking to buy this, right, to take advantage of a sell-off or to take advantage of whatever reason this is, and you want to invest in this, look, truth is, at some point, I don't know when that's going to be, But at some point, it's going to go right back here. It's going to go right back to 48. It'll get there eventually. How long will that take? Well, just like I put out in my other trainings, you count the candles, right? So from February until now, you basically have 4 months at minimum, probably, right? Unless you count the candles and you see that it runs higher, it has a chance of going back. So this could be another one too, depending on how you want to play it. In the options world, that's probably something. If you're doing shares, maybe want to let it dip a little bit lower. Same thing. There's probably something in. Let's see. I thought I had the performance down for a second because I saw all these down ticks. Let's zoom in so I can see a little bit better. Got Celsius. Got Crowe. Crowe is one that I called out before. There was a little run up with that too. Obviously, you see that it hits this resistance right here, but it's probably going to reach this 110 also. We found Crowe last time. There you go. What up, CRISPR? And here's another one. I mean, you see the RSI though. The RSI is hot, so there's probably some sort of a pullback. But here's the reason though too. It just broke through its previous high, right? So the RSI is always going to be hot at this point, and there's always going to be some sort of a pullback. But that being said, you have this right here at 147. You have another ceiling and also a floor support at 147. So my assumption, without knowing anything else behind it, is that this has the potential to at least reach 147 at minimum. Will it get to the rest? Up here it's a little shaky, but at these peaks, definitely, for sure. 170, like 172, it's totally possible. And it's already headed in that direction. You see all this, it's going nowhere but up right now. For whatever reason, I don't know exactly what the catalysts were behind it, but yeah. Look, I just talked about Edit, their competitor, right? CRISPR, ink deal for gene therapies. So that's probably it. That's probably one of them. But that was on the 16th, so maybe it's still the remnants of that, right? Just like there's an earthquake and there's a tsunami, there's always some sort of an aftershock. There's an after effect to it. So there's still probably that residue that's all part of that PR that affects it. So CRISPR could be another one. I don't know their price target, but looking at the charts, like your price targets are whatever you want your price targets to be, really. But obviously they need to be realistic. And you find the realistic ones based on the support and the resistance. Caesar, nothing. I know some people were playing Dish too. Here's Edit, the one that I did. Like, just looking at Edit, the chart is crazy, right? Obviously the chart moves a little bit slower, but that's only because it's still under the radar. There's not a lot of people on it. And therapeutics is one of those industries that it always sort of, like the biotech and all that stuff, it moves really slow. You have to have patience to be in the biotech world, which we all know from APRE, right? EXPI. My friend actually works at this company. But again, I look for the gaps. I look from where the share price is and to where it was before, right? And I see this 60 right here. And I see this 60 and I just see dollar signs. That's all I see. It's probably a little bit less. It's probably like 58. So this is another one. This is another one that I would write down and just see how it's moving. You can obviously see that it's moving sideways a little bit, but I want to know a little bit more behind it. It's obviously really strong resistance at 39 or 40, because you can see, how do I know that it's strong resistance? It's because it's touching here and it's the same level of where it peels back here. So this obviously becomes a key level that it needs to get through. But once it does, once it breaks its key level, it's got a lot more room to run to its next pivot point, which is 40, like 47-ish, right? You know, you got all these candles here, but you got the pivot points is where it really matters. The pivot points are where the real sauce is, at least from what I've learned. Like I said, I don't pretend to be a pro. I don't pretend to be a wizard, but it's what I see. So this is potentially a $39 to, let's just say 47. So $8 a share. In the options world, that's a lot of money. In the shares world, it's good too. Don't sleep on the small opportunities like $6, $8 a share, because if you're buying 100 shares, like that's $600, $800, right? That's a solid investment into something else. So you got EXPI, just moving along, you know, looking for the green ticks. You got Fang, got Fate, nothing. And I'm just going quickly, just breezing. The chart on MGNI, I know we've played this a couple of times, and it's slow moving too. But there's potential with that there though too. I just want to check in with y'all real quick. Everybody good? Everybody still good? Let's see. All right. Okay. Moving on. I just wanted to breeze through some comments real quick. I don't know what I clicked on. I clicked on more. Okay, so moving on. I was looking at somebody texting me who's in the training. Mar, MGNI, just moving. We're just moving. You got Penn. I see, obviously a lot of people were playing that too. Super volatile, right? It's going sideways, consolidating. So look, I would keep Penn on your radars because it's consolidating sideways and it's building up, right? You could just see, it's so clear in the chart. You could just see it, right? Let's zoom in so everybody could see it. I don't really know how to draw on the FinViz. I don't really be drawing on it. Only on stock charts, really. But you see, it's been going sideways since mid-May. So at some point, Penn's about to blow up. It's going to go right back up here to 118. It obviously has a lot of levels to get through, right? And I don't really know a whole lot about Penn. It could be, yeah, it could be a lot of things. I know that there's people in Discord who know way more about it than I do. Long-term investment, I think Penn is one of the better investments. Long-term. But you can see in Penn, it's going sideways. And in the options world, sideways is terrible for your contracts. So, you know, it's also not necessarily a good idea to get on something that's going sideways in the options world. And I know a lot of people have been playing it lately, but I'm just saying it's going sideways, which a lot of people probably already knew that anyways. I don't know anything about Redfin. What's up, Redfin? Redfin Corporation, real estate. So already, RSI, still not extreme. It's been to 72, but it's also already been up to 90 before. So look, here's the thing too. People get timid about the RSI, right? They get timid about the RSI and it pulls back. I mean, you can obviously see it here, right? This is starting to be its threshold. But you see this here too. So this is obviously a prime indicator too, is the death cross. So this mofo going down. So the death cross, for anybody who's new, is a bearish signal. So anytime you see this death cross, I guess it looks like a death cross to me. It's like a mid-death cross. I think the cross got to be a little bit higher, but it's still high. It's got to be more like up here, I think, but it's still higher than the previous high. So it's a bearish indicator, right? Did I get that right, y'all? Yes, I did. Put city. That's it. Put city. You heard it here. But looking at the chart, right? So actually, I want to zoom in a little bit more. So if you did that, right, you did put city. That's at 63. I mean, potentially, look, man, that's a big gap to fill. From 63.77 all the way down here to $60. Man, dude, that's a lot of money in the options world. That's $3. Come on, man. That's an opportunity. It's an opportunity. And yes, it was only up, 47 cents, but indicator says it's going down. Will it happen? Who knows? The market always switches it up. You can't always tell, but it's a possible opportunity. Obviously, Riot has played a bunch. Roku has played a bunch. Roku's taken off always. Run was running a little bit too, we saw. I was actually looking at SFix earlier, Stitch Fix. I was looking at this earlier in the week, but I saw that it was going sideways, so I didn't get into it. But I saw the gap, and I like the gap. I just don't know. I know about Stitch Fix because I have a clothing service too that's similar to Stitch Fix. They're the Menlo Club. I don't think they're publicly traded though. So anyways, with Stitch Fix, 57 RSI, it's at 61 going sideways, basically at the same level. I mean, there's potential, right, for this to end up going higher, but because it's going sideways, I move on. I just make a mental note of it, or I write it down if it's I feel like if it's close to doing something, and then I just move on. So you got Stitch Fix, moving on. SNC, X1H, TCBI. So a lot of these just consolidating. I mean, that's a long time for something to consolidate. And you look at this, right? So you obviously can't look at this previous, I don't know. I never really, oh yeah, you can. I mean, look at this consolidation, right? So on TCBI, when you look at this consolidation, that it starts essentially right here in June, and it goes all the way to October. So you have 4 months, 1, 2, 3, you got 5 months, 5 months of consolidation. And then what happens? Boom. 5 months of consolidation, and then it runs. It runs from $30 all the way to $70. 5 months of consolidation, right? So now what's happening? You're already in the second month, going on month 3. So let's just say hypothetically, there's 2 more months left of consolidation, and it's probably going to do the same thing. That's my guess. Could be sooner. Could be sooner. But probably not, because it looks like it's struggling just to get over the 20. But also too, the 5 and the 20 are going to cross soon. So when that crosses, chances are it could break out past this. But I don't know what this sell-off was for. I have no idea. I don't know what that was from. And then you see here, this I'm guessing was quad witching, which wasn't much. I would expect this to be quad witching, not this. But quad witching was toxic this year. It messed us all up. Messed up all of our thesis and our theories. Coming through TCBI. You got TGTX. And again, y'all, I don't know anything about these companies yet, so I'm just finding them. and I'm writing them down. I'm looking at them real quick. I'm analyzing it a little bit in the same way of like, where's the gaps? Where's it been? So this, I mean, look, this is something here too, because look, it's got a support here at 43. So this could potentially go 39 to 43. RSI is at 63. It's still got a little room because it's already been up here. It's been up here to 86 before. Also, the outstanding, and this isn't completely accurate either. I know that this is wrong sometimes, the outstanding and the floated shares, but look, this is floated $11 million. That's a lot. And the short float, basically, the short ratio is how many days that the hedge funds have to cover their shorts, which is basically 8.5 days. So that's also not a lot of time either when it's 11 million shares. And it looks like they announced they had a data presentation on the 18th. And then too, like, don't ever discredit like what's on StockTwits. I don't always follow it. I personally, I like Twitter better than StockTwits. StockTwits is more stock focused, but Twitter, man, I'm telling you, is the #1 news source in the world. There's so much information. I've learned, I've gotten into so many plays just from Twitter alone. Or at least as I would be looking for TGTX, and then I would go look at another one, and then, you know, it would end up putting me onto like a competitor. So don't underestimate that. TGTX might be something too. Again, I just write them down into a list, and I come back to them. This part about Friday is really about like scanning the charts, looking at them all and seeing what the activity was. TCBI, we already looked at that one. See, like even looking at TCBI, I stopped at that one because it's interesting. If something is consolidating this much, you should always put it on your watch list, because when it runs, it's going to run really hard, as you can see, right? That was worth 5 months of consolidation. And then, and then it goes back down. Go figure, right? Obviously Tesla's got a good gap too. You know, Tesla's doing what it does, but it's got a good gap too. Viac, I know a lot of people play Viac, and same thing here. Viacom is consolidating too. You know, let's see what else we got. Zion. Okay, boom. So that's it for those. That's it for those. Are y'all still with me? Let's see what we got. I just want to backtrack for a second, see what y'all are talking about in these comments. Yeah, look, I know a lot of you guys are using the strat too. I see like TCBI inside week and all that. That's that strat talk. I don't use the strat. I'll get on it eventually, but look, just because I don't use it in my everyday life of the stock market, don't think that I ain't in Ray's trainings. Don't think I ain't on Ray's lives. Because I'm like a fly on the wall, man. I soak it all up. Describe what I see in the Oracle chart. Hold on one second. How do I decide whether to play the swing or option on your plays? So if I'm going to do the options, the volume and the open interest has to be right for me to get into the option plays, right? And I want something that's generally over like the 200 mark, but there's also like if there's something that's say 275 or 300 and the other one is like 56, the volume or the open interest is going to come as the volume increases, or if it's the open interest that's high, the volume is going to come because there's so much open interest. So I don't necessarily let them entirely dictate what I do. But with the stock shares, I go into those companies that are good. I want a good, solid growth company. in the stock swings, and whether that's like 15% earnings per share quarter after quarter, or it just continuously moves upward. That's what I look for in those two plays. How to enter a day trade on a 5-minute chart, and do you look at moving averages to cross? Look, when I enter the trades, I don't enter on a 5-minute chart. I look at the 5-minute chart. I look at the 30-minute. I look at the hour. I look at the 4-hour. I look at the day. I look at the week. I look at the month. But when I'm entering trades, I look at the real-time data. I want the 1-second chart or the 5-second chart. I don't want a 5-minute chart. I don't want a 5-minute delayed entry, which is, look, and to be honest, like, I know a lot of people use the strat too, right? And I actually don't know a whole lot about it in terms of like how you guys enter your trades, of if you do it in real time also. But I know for me, I do, because I don't want to be behind in my entry points, and I damn sure don't want to be behind in my exit points. Stock swings, it's different, right? It's not as volatile as the options world. So you can use a higher moving chart, like a 1-minute chart or a 5-minute chart on a stock swing. But in the options world, why would you use a 5-minute chart to enter a trade? Like, why wouldn't you use a 1-second or a 5-second? Don't you want to know what the real-time data is? That's just me. That's my own personal opinion. Yeah, strategies use previous candles break to the upside or downside to enter trades. Right, but even though they use those, there's still real-time data, right? There's still real-time fluctuations in the price points. So my question is, like, what are those time frames that are being used? Is it real? Is it like the real time, closest to the real time? Seconds, minutes. Yeah, I think so. I think look, Robinhood is super convenient. The charts are convenient. The options it's a seamless platform. Is it sketchy? 100%. But it's the seamlessness, it's the convenience of it all that makes it effective for people. So that's why people use it. Yeah. So I know y'all keep asking me about this Oracle chart. So let me go look at this Oracle chart real quick. So look, I know, like, in the options world, and I know people are invested in Oracle too. Like, why wouldn't you be, right? Why wouldn't you be invested in this? It's going what way? There's only one way this whole entire chart is going. That's it. Like, yes, all of this stuff, like, if you zoom in, right? You zoom in, you see all this stuff. You see these little moments here, right? All these dips. You have to ignore this. Yes, it makes sense, like, when you have money invested in that sort of thing, it matters. I get it. But don't be blindsided by it, because if you zoom out and you look at that whole entire chart, it's only going one way. That's it. It's going one way. So 10 years from now, there you go. This was at $57 in, I can't even see, in July of last year. This was $57. It's at 85 now. Or, well, 78. It's 78. But if you notice trends, right, you see, where are the peaks at? 61, 65, 73, 80, 85. What's the pattern? The pattern is what, $5-6? So my guess, so what are the gaps in between? This is me being a stock market sniper right here, man. I'm telling y'all, you guys underestimate this so much, is that you have to look at averages. You have to look at price action movement, right? You have to look at trends. You have to look at data, right? So from point A to point B, this was $73. It went to 80. It went 73 to 80 in basically a month, right? Went $7. Went $7 in 30 days, right? From mid-April to basically mid-June. Yeah. Well, yeah, mid-April to mid-June. So 2 months, this went $5 essentially, right? It didn't even really move here. It went like some cents. But in 2 months, this went $5. That's basically $2.50 a month, right? So then even backtracking, right? You have mid-December till March. So 3 months, this thing goes $8. $8 in 3 months is basically $2.50 a month, right? Okay, boom. So what clicks? $2.50 a month here, $2.50 a month here, $2.50 a month here. And then, oh, what also happened up here? $2.50 a month here, $2.50 a month here, right? So what's your assumption for, let's just say, August and September? Probably $5 to $7, right? I'm just saying, y'all. I'm just saying. You know what I'm saying? Do y'all understand that? Does that make sense for y'all? Do you guys see the same thing too? That's the way that I assess it. That's the way that I break down the price movements. Do you understand? Y'all are funny, man. That it's right. The dips are the times to buy. Everybody panics at the dips, man. Look, if you're in shares, why are you panicking? You're not going to lose a single dime unless you press the sell button. Look, and if you panic in the options world, cool, I get it. But do you understand the levels? Do you understand the possibilities? Do you understand the possibilities of how strong the price movements are, right? What else y'all got? What else y'all want me to snipe out? What else you want? Slap it up, flip it, rub it. Y'all are crazy, man. Wells Fargo. Fine. Wells Fargo. I don't know their ticker. What's their ticker? I never played Wells Fargo. I'm not a fan of Wells Fargo Bank, so I don't really play their ticker. MU. Wait, what is what the hell? I forgot Wells Fargo's ticker. WFC. I mean, so it's like the same thing with Wells Fargo, right? You look here at Wells Fargo, consolidating for 4 months. 4 months of consolidation, then what happens? Runs up. Runs up basically from November all the way to June. You can forget it, like just forget about this part. You know, it was such for a short amount of time. Yes, it matters, essentially, I get it. But in the grand scheme of it all, bigger picture, it's meaningless, right? But it looks like Wells Fargo obviously is at the crossover. Is it going to break out? I don't know. It doesn't look like it. It looks like it's going sideways again to me right here. Oops, I don't have my annotation on. So this has been consolidating since May. So it's got to break this 47 barrier. Then it's got to really break through 48. Chances are it's probably going to consolidate again, way back here, right? This was 4 months, five months, really, 5 months of consolidation. So would it be safe to assume that this is also going to go sideways for 5 months? Well, it's already in month number 2.5, really, right? Because it started at the beginning of May. And it's already almost July. So it's headed into month 3. So I think it would be safe to assume that this could potentially consolidate for another 2 more months or another 3 more months and then make another run. But like I said, I always tell you, test your theories. So test your theory, put your levels on it, right? That's what I would do. See what else y'all got. I want to look at BAC. Looking at BAC. Bank of America, all these banks. Same, I mean, look, their charts are similar, almost identical. Like legit identical charts. I know y'all see that, right? Y'all see the identical chart? Same thing, right? Look, I know you say like, banks are about to pay. Also, too, what do the airlines look like? You know, I know that we use the screeners, right? But what do the airlines look like? Let's go look at some airlines. I don't know. I think that there's like 100 and I don't know how many airlines are in here. Like 100 something. But let's go look at the airlines. A bunch of it. I got airlines in here that y'all probably ain't even heard of. How? Because I found every single airline in existence. And I charted all of them. So this one obviously is like different indicators because I haven't updated it yet, but it doesn't matter because the 20 and the 10 are really similar. It's only off a little bit, but it's American Airlines. And here's the thing, you put them in your stock charts and you can go through them in a split second. You got Associated Capital Group. Who knew about Associated Capital Group? Anybody know about Associated Capital Group? Nobody? No? Just put it in the chat if you don't know. No? Nobody? Nope. Okay. So here's the thing. Look, it's breaking out. It did break out. It ran from 38 to 41, right? Nobody knew who Capital Group, Associated Capital Group was. I don't know specifically what their holdings are or anything like that off the top of my head, but you can see in the chart, the resistance is like plain as day, right? If you just draw your levels on it, boom, you can see exactly where it was going to touch and where did it's not a perfect line, but look at where it touched, right? Same thing here. Look at where it touched, and then it comes here. Obviously, it can't sustain itself. Why can't it sustain itself? Because there's just not enough support there, right? Because your resistance becomes your support. So it needs, I was talking about in my other trainings, how I view this as like people under a bridge, like holding it up. And there's not a lot. There's a lot more here because you also get the remnants and the residue. Remember what I talked about, like the residue, right? There's still this to take into account. There's, that's not a far gap in between. So there's that. That's another one. AC, airlines. And that's it. Just go through them all. A-Fly. I mean, look at this one, man. This is A-Fly. This is international, Air France. Air France KLM. You look here, right? It's undervalued. It's about to hit rock bottom. So what's that mean? So what that means is boom, this is about to hit a floor, right? So you got this floor. Can it go all the way down here? It could. At 3, chances are it's probably going to come here though. But you see, it's like struggling to stay right here. Oh, that's a bad line. It's like struggling to stay right here. But you see here too, is you also have the death cross. Essentially, right? Same signal. It's all bullish. It's going down. It's just plummeting. So it's trying to find that floor. Where's it going to be? Chances are it's going to be like right at 5. And then it's, from 5, it's probably going to come to 4.5. And then once it breaks 4.5, bam, right under 3 or right under 4. So that's A-Fly. Write it down. And I'm pretty sure you can do options on A-Fly. I'm not always sure if you can do options on it. So if I'm not sure if you can do options on A-Fly, I come over here and I look. Let's see. I didn't load it. A-Fly. Air France. I don't know why Air France ain't on here. No, that's Air. Yeah, so if it's, let me see. I'm sure one of you guys already answered it in the chat though. Oh, you can. Oh, I see. Yeah, you're right. I got it. Idiot. I guess it's because I always like breeze through that top half. And I'm always looking at like the highs and the lows. So I totally missed it. Anyhow. Moving on. AGGNY. That's one I got to update. That's why I did that. So then from there, same thing, like look at Allegiant. There's a thing too, like airlines, there's a lot of airlines down. Like these are opportune times to invest in airlines because once they start back up and world resumes, if you've got those shares, like, man, I'm telling you, it's crazy. This is at 190. This mofo's been at 270. Dude, that's crazy. You can play options on it too and look at it. Plummeting. This thing's gonna go all the, it's at 190. So that's it, man. It's already here at 190. That's it. Do y'all see what I see? Space. Every time I see the space ticker, I think the Old Spice. Look, and I know I put that big post out on space earlier today, and I'm like, if you do your research on this company and what they're planning to do for commercial test flights and what they're trying to innovate, like, and I know GP is stressed about it too, and he's talked about it. He's been telling people a long time to buy into it. I got into it early. I got into this thing when it was in the 20s, before the test flight, back in May, the end of May, like right as soon as it was sort of crossing almost is when it was like right here is when I caught it. Ish. And that's it. Gangster. Yeah, you know, the RSI is hot, but here's the thing. It's hot because it's approaching its new high. It's approaching its high. It's approaching its 52-week high. And look, its high was 3 months ago. Its highest of all time. It's 3 months ago. So it's fine. The RSI is obviously going to reach a point. It's going to pull back, but it's not going to pull back very far. It's not going to go back down to 36. It's not going to be there, right? That's really strong support at 36, but it's probably going to live around here where the moving average is, right? Where these peaks are. You guys have to, that's part of these moving averages is the support lines, the support of the candles usually rests the strongest on the peaks, right? So the peaks for this is 50. So when this pulls back, my assumption is that it's at, in terms of like the furthest it's going to go, probably 50, and it's going to reset itself. And what happens when it resets itself? Look, I told you guys I think in analogies. And so every time I think of pullbacks and every time I see these peaks, I think of like just a, and endurance races, right? I think of somebody just sitting on the tip of the hill with their feet just dangling over the side, just sitting there resting. That's what I think about when the market pulls back to these peaks. Is the stock's just going to go have a seat? The stock's going to go hydrate, put its feet over the cliff and just say, you know what, let me just rest for a second. And then it's going to get right back up. It's going to keep going. That's how I think. That's how I analyze, right? So looking at this, RSI is hot, sure. But it has really strong catalysts. So what's to say that this thing doesn't go to 90? Nothing. It has so many catalysts behind it right now. So RSI isn't a real-time indicator of what a stock can do, right? You have to look at other factors. Anyhow, y'all, it's 10 o'clock. I could go on for hours. I could go on and keep showing you guys all these tricks and all that stuff. Obviously, we got to end at some point. But how has this been for y'all? Valuable? Do you feel more confident? Are there any last minute questions? I'll answer questions for the next 5 minutes or so, and then I think we should wrap it up. I appreciate y'all, man. I appreciate your love. What was the stock? Logitech. All right, y'all wanted to see Logitech real quick. I'm gonna go look at Logitech real quick. I like when you guys tell me to look at stuff because it's like what you guys are in. And it's either like stuff where you guys are like getting your face kicked in at, or or obviously like you're about to get into, but I love it when you guys always say like, go look at this, go look at this. I mean, same thing. It's like, you got to ask yourself these questions. What's like right off the bat, the first question I ask, I don't even care where the stock price is at the moment I look at it. I'm like, okay, where's the overall direction, period? Like end of story. What's the overall direction of the chart? Dude, this is one way. And I know somebody had said to me, Michael, why you always choose stocks that are going up? Why? Well, because I want to make money, dude. That's why. I want things that are positively moving in the right direction, and the right direction is up. So that's what I look at. But also at the same time, I've been trying to fine tune my game to play the flip side, to play on the downtrends too. So I'm going to go real heavy on those real soon too. Look, here's the thing. There's a theory, right? That the stock market is crashing. It's coming down. Look, and it's a bull run at the moment. Look, my theory is this, and I know that there's a lot of voices, there's a lot of noise on social media, there's a lot of noise in the stock market, but look, people underestimate what COVID really was, right? Everything plummeted, everything tanked during COVID. To me, that was the market crash. That was it. That was people's last chance to get in before everything runs, right? And so as you keep going on in the market, I think it's important to be cognizant of that, is that look, the world is reopening. The world is tired of the masks. The world is like all this COVID stuff, everything else, right? Everyone is anxious to get back to their normal lives of the way that it used to be. But also, too, there's a stronger importance on values now more than ever, right? And so that's translating into companies. And companies are putting into effect things that they took for granted pre-COVID, right? Because they also learned lessons. They also learned how consumers move. Right? So these are all things you have to keep in mind when you're looking at these charts of what influence does this stock, does this company have in the marketplace, right? And I know like it's Logitech, right? There's companies that are plummeting in tech, but there's also companies that are thriving. And to me, this looks like a company that's on the uptrend. So this is at 120. And I would say based on the candles, like I said, I can't always see this really good in stock charts. So if I can't see it real good, I'll take it to TradingView and like look at the levels even closer. But right off the bat, you can already see like that's the level of resistance right there, or support, right? Of where it stopped. Why did it stop? Because it was already right there, right? And remember how I said just 2 minutes ago that the stocks, they just rest on the peaks? Man, look, it's just right there. Look at how the candles touch the peaks. That's it. So anytime you see those peaks, man, just think about the stock, the little stock, man, just sitting on the hill, hydrating, just resting, trying to figure out his next move, what he's going to do. That's how I look at it. I know it's cheesy, but That's how I look at it. I keep it simple, and simplicity is everything as you're looking at all these plays, right? So in terms of where this could go, it's obviously on the downtrend. So let's just say hypothetically it busts through 120. It's got a really, I wouldn't say a really strong support, but it's got support at 115. But it could definitely go there for sure. It's got to touch the 117, but I don't think it would be there very long. I think where it will stop and have a hard time breaking through is 110. 110 for me on this is like, it's probably not going to go below 110 if it plummets that far. Chances are it's not really going to plummet. I don't think it's going to plummet too much lower than 117. Based on this, based on these dips, and based on this data right here, right? Because if you look at the chart, it's just similar. It's similar dips. You can see it. You can see the similar trend right here. This is similar to this. That's how I would look at that. Does that make sense? Do y'all see that too? Let's see what else we got. What else y'all got? Man, y'all are quick with these messages. Y'all are so quick with these messages. All right, I'm gonna look at DARE real quick because I saw that in the chat a couple of times. DARE, do y'all know what DARE stands for? I was in the DARE program when I was a kid. The DARE program, drug abuse resistance education. That was a dope system. Let's see. I didn't really know anything about DARE. Obviously, the RSI is really hot on this one. But like I said, potentially this could go to 85. So, and with that being said, you know, just charting it, right? Looking at the levels, you come over here. So it's at 169. Chances are it sits at 180. And then again, how I was saying, it just rests on the peak. Look at all the candles this touches at the peak. So then it's at like 210, right? Highest it'll go, I don't think it's going to go way up here just yet. It's like where I think it'll stop. And, you know, what's a realistic price target? 250. Why? Because look at all these candles that it almost touches, sits on these, all this support, boom, boom, boom. Remember the people under the bridge. So 250, I think, is a realistic price target for this. So can you play options on this? No, you can't. But if you're a shareholder, right? You know, if you go in now, you basically get another $1 for your money. Could it go higher than that? Sure. But RSI is still pretty hot too. So I think the 74, when it gets to 85, chances are when it gets to 85, that's going to be right around the 180 mark. That's going to be really strong resistance for it to break through. It's going to have to pull back at that point. And if it pulls back, chances are it pulls back to like 178-ish, you know, just below it. That's my guess. Might be wrong. How do you know when to enter trades? Tash, are you talking about stocks or are you talking about options? Stocks. So obviously, like if you're entering stocks, you want to enter at the lowest floor, right? So, you know, part of the whole money flow thing is the stocks moving in 4 stages. Hold on, I just want to clear this out. So that if you're essentially entering in this trade, like RSI is still really hot, right? So it's at 174. So the opportune time to enter this trade, if you were to do it at this point, so if it's all the 4 stages, right, of the whole money flow, of it being stage 1, stage 2, stage 3, stage 4. You buy it and you sell. You buy at the stage 1, sell at the stage 3, buy sell at the stage 3, pretty much, right? It's the same level, and then you let it run at the 2 and the 4. So based on where this is at too, right? So that's at stage 1, right? So this is already at the stage 2. It's gonna pull back. So when it pulls back, wherever that's at, that pullback is probably going to be the stage 3, which then becomes the stage 1. It's the same level, right? That's the part of scaling in and out of trades, is that at that level there, you would sell a portion. And also chances are, is like when it gets to that stage 3, it's obviously got to choose a direction. And with the RSI being hot, chances are it's probably going to dip. It's going to dip again. So wherever that level goes, let's just say it comes right back here. That's the point you want to go in. That's the point you want to go in. So, you don't want to buy it when the RSI is so hot like that, because it's at its peak. Don't buy the tip, man. Buy the dip. That's the magic phrase. Man, y'all are cool. What else, y'all? Anything else? Any questions? Stop the screen share for a minute. If you want to, so I know you guys are asking a lot about the options. How do you know when to buy in for the options? Look, there's actually a lot of resources on the options. I know, like, spending time in the options beginners study group there in the room, so beneficial. That shows you the fundamental way of entering those plays for options. And then obviously Kayla has a course on options, and she's super knowledgeable about it. Kia has his course on options, which is super simplified, and really helps you understand those opportune buy points, right? Yeah, guys, you know what? I can't stress enough, man. We have, we have so many people in the Wealth Squad, and we have so few people that come to these classes, and we have so few people who really take advantage of the videos that are uploaded. And it doesn't matter how much you know. It doesn't matter how seasoned you think you are. Look, I still watch the Stock Market Gems. I still read Kia's book. I still look at videos on YouTube. I still scour everything to keep trying to learn. I still learn from you guys, man. I learned from all of my mistakes, all of the bad trades I got into that didn't turn out the way that I wanted it to. So don't ever think that you're above learning, right? Take the time to go back to the fundamentals and the basics, because after you win for so long, there comes, and this is a basketball analogy too, man. And I realized this when I won a couple of championships, is that when you're on top and when you win so much or consistently, or you have those big 100% bangers or whatever, right? You tend to forget the fundamentals that got you there, right? You forget about it because you're so caught up in the winning aspect of it and thinking that you're untouchable. Well, truth is, look, you're not untouchable, right? So humble yourself, go sit in the university, go and learn about the things that be honest with yourself that you could be better at. Just give yourself 15 minutes a day, 30 minutes a day. If you do that over and over and over again, that's what makes you unstoppable, man. That's what makes you great. That's what the standard of excellence is in the market. And I've just tried to instill that with you guys. Consistency is everything, man. When I was playing basketball, I was the first guy in the gym. I was the last one to leave, even after games. I made sure that I was there for shoot arounds before everybody else. And if there was somebody there before me, I found out what time they got there and I made sure that I was there sooner. It's when you put in the work on that level of consistency, after time, it's really going to add up. So that's all I got, y'all. That's all I got, y'all. This whole thing is just a small fragment of sniping out plays, but this is a repeated process, rinse and repeat over and over and over and over. Is it tedious? Yes. But is it exciting? Hell yes, it is. Hell yes, it is. Those payouts, man, I can't even tell you. Those 200% bangers. Look, I don't even care. Those 25% bangers too. Those are bangers too, man. 25% is a banger. 30% is a banger, man. If you're too good to take 10% profit, you don't deserve 20 or 30, period. Like that's my opinion. But look, keep doing the work, y'all. I gave you some screeners in my previous trainings. I walked you through my process. I gave you screeners for finding these super volatile day trades of things. You guys are like, oh, what's the next play? What's the next play? You use that screener that I just gave you, you're going to find plays. You're going to find YOLO plays from it, I promise you, because I do. I do. But just because you have the screener doesn't mean I'm not going to find them plays before you, because I will. Y'all are great, man. Keep doing the work. Keep getting money. Keep buying income. And I'll see y'all back in the Discord. Have a good night, y'all. Have a good weekend.